Welcome back. I'm Rhonda Porter with the Mortgage Porter, your local Seattle area mortgage advisor. And this week we have a busy economic calendar to talk about. Plus, I'm going to dive into one of the biggest questions that I hear most often from buyers right now, which is should I wait to buy for lower rates or should I go ahead and buy now? So I've got some real numbers to share with you today. So let's get started. According to the Optimal Blue Index, which tracks about 35% of mortgage transactions nationwide, the average 30-year fixed rate as of last Friday came in at about 6.313% and this is slightly higher than what we shared with you last week. So a couple of important reminders is that you can't lock in last Friday's rates today, and your credit score, down payment, and other factors will impact the actual interest rate that you will get. So this index is just meant to give you a sense of the direction of how rates are trending. And so if you would like to have a mortgage rate quote for you based on your personal financial scenario and based on what are current mortgage rates, not rates from last Friday, please reach out to me. I'm happy to help you with that. Well, it's jobs week, and here's what's on the calendar. Tuesday, we have the JOLTS report, which measures jobs openings, and we also have new home sales data. On Wednesday, we have the ADP employment report, and the market's anticipating around 100,000 new private sector jobs to be added. On Thursday, we have the weekly jobless claims, and on Friday, we have the big one, which is the BLS jobs report, and forecasters are expecting around 60,000 new jobs and an unemployment rate of 4.3%. And so why does this matter for mortgage rates? That's because the bond market, which drives mortgage pricing, reacts strongly to employment data. Weak jobs report typically sends bond prices up and mortgage rates down. And a stronger than expected report can push rates higher. With all this data coming out this week, expect some rate movement. And just so you know, the next Fed rate decision is on June 17th. And the Fed has been on hold watching inflation and jobs data closely before making any moves. So this week's numbers will absolutely factor into that conversation next month. As of Monday morning around 10:30, mortgage-backed securities are down around 28 basis points, and the MBS Highway has issued an alert to lock. That means that pricing is moving in the wrong direction, and we're anticipating mortgage lenders issuing out new rates of pricing for the worst. So either you're going to pay more for an interest rate or that interest rate is going to be higher. And if you're currently under contract or waiting to lock on a refi, you may want to reach out to your loan officer just to have a conversation with them to see whether or not locking right now is a good idea for you. Okay, now let's talk about if you've been sitting on the fence waiting to buy, but you're wanting mortgage rates to come down. And so I've got something I want to share with you, and it's putting together some numbers to help you make a decision on whether or not it is the right time for you to buy or not. And so this is a cost of waiting analysis for a first-time home buyer using the Fannie Mae HomeReady loan program. And so this is a program designed for buyers with moderate income, and it allows for just 3% down payment, typically has improved mortgage rates and reduced mortgage insurance. And so we're looking at a $600,000 home in the 98056 zip code, which is the Renton area, and we're using appreciation forecast specific to that market and rate projections from Fannie Mae. So, and here's what buying today would look like. We're looking at a down payment of $18,000. That's the 3% rate in the mid sixes, and a total monthly payment of $4,447. Total cash to close coming in at just about $34,609. Now, here's what happens if you wait for 2 years, potentially. That same home is projected to cost $654,224, and that's a gain of over $54,000 in value. And so rates are forecasted to improve a bit, down to about 6 1/8. But even with that lower rate, your payment would go up to about $4,667, and that's about $220 more every single month that you would be paying. And also, you would need more cash to close. You would need $38,760 instead of $34,609. So if you add it all up, the net benefits of buying today versus waiting in 2 years would actually be about $55,504. Don't forget that $4. And this estimate is even factoring in a potential refi costing at $4,000. So, and that's assuming that you were buying now and rates actually improved enough to refi within 2 years. Now, I want to be really clear on this, that this is based on forecast and predictions, and every buyer situation is different. I'm not saying everyone needs to go out and buy this week. What I am saying is that there is or can be a cost of waiting. And while you are waiting, that home gets more expensive potentially, depending on the area and the markets. And you are building equity for someone else through the rent that you're paying instead of paying yourself with your mortgage payment. So the cash you need to buy that home too, the very same home as you wait, as it appreciates, will become more for you to obtain too. So if you would like a buy versus wait or cost of waiting report prepared for you based off zip codes anywhere in Washington state, please reach out to me. I'm happy to prepare this for you. Thanks so much for watching. If you have questions about your specific situation, whether you're thinking about buying, refinancing, or reverse mortgage, or just trying to understand your options, I'm always happy to help you, even if it's months or a year or more away. So take care, and I hope you have a great week. Bye-bye.